Hello, community. Dr. Kenyon Meadows here. If you go to the alternativefinancialmedicine.com homepage and scroll down a bit, you'll see the Ask Dr. Meadows tab. And what that is that you can click right on it, be it on desktop or mobile, and leave me a voicemail message in the form of commentary or questions about anything that you see on the blog, these videos, or the book. And today we have a question from Andrew, who is a veterinarian and a real estate investor who's expressed some interest in private mortgage lending and real estate crowdfunding. So let's have a listen in on this.
Hi, Dr. Meadows. My name is Andrew. I have a turnkey rental property, single family rental, which is positive cash flow. I like the way you think and am strategizing my next move over the next 8 to 12 months as far as investments, considering a duplex with a $100,000 down payment, but I am attracted by the many alternative investments, crowdfunding, hard money lending, etc. Although there's no tax haven in those things as real estate, I was hoping you could steer me in the right direction.
So Andrew, it sounds like me in that your primary focus is on building a rental portfolio and actually owning income producing property, which is really hard to beat when you factor in the ability to leverage, get cash flow, depreciation, and yes, the tax benefits. Nonetheless, you have some interest in private mortgage lending, and I think there are at least a couple of reasons why you should consider real estate crowdfunding as your starting point down this road. Number one is time. It takes a considerable amount of time and effort to find a reliable partner to do some traditional or offline private mortgage lending. You have to vet the person's track record on previous projects, talk to their current and past investors, and really network to find the very best people to work with. So a couple of the big value propositions that a reliable real estate crowdfunding platform is supposed to bring is due diligence and access to deals. The other big reason to look at crowdfunding is the much lower financial barrier to entry. You mentioned that you're getting ready to deploy about $100,000 as a down payment on a duplex. Well, you can definitely spend a similar amount of money to do a traditional private loan on a moderately priced single family fix and flip project. So again, if your main goal is to build up your rental portfolio, now you've got competing interests for that 100 grand. But as an accredited investor, which it sounds like you are, you can go on a real estate crowdfunding platform and deploy a much smaller amount of money, say $1,000 or $5,000 on a fraction of a private mortgage loan, earn some good interest, and at least begin to get some exposure to the lending side of things for some diversity without significantly detracting away from your main goal. You correctly point out that private lending does not come with any inherent tax advantages on your returns. However, if you have a self-directed IRA account and use those funds, then it can be tax advantaged, and many of the platforms do accept IRA money. Be sure to visit Alternative Financial Medicine and check out my blog post, 3 Years of Real Estate Crowdfunding, My Results, where I review my experiences with this asset class, including my top platforms and what my overall performance has been. And don't forget, we devote a full chapter to real estate crowdfunding in my book, Alternative Financial Medicine, High Yield Investing in a Low Yield World, available now on Amazon. Hope this was helpful. Thanks.